What if I told you that hitting an 800 plus credit score in 2026 is no longer about just paying your bills on time, but about playing a smarter, more calculated game, one where artificial intelligence quietly works behind the scenes, while you stack your debt in a way most people don't even understand. Because right now, across the United States, a small group of financially aware individuals are using AI tools, behavioral data, and strategic debt positioning to push their FICO scores into elite territory, while everyone else is still stuck following outdated advice from a decade ago. And the gap between those two groups is growing fast. To understand how this works, you need to first realize that your credit score is not a reflection of wealth. It's a reflection of behavior. The FICO model is essentially a risk algorithm, and in 2026 it has become more dynamic than ever. Payment history still carries the most weight, but what's changed is how lenders interpret patterns. They're no longer just looking at whether you pay on time, they're analyzing how you manage your balances, how often you use credit, and even how predictable your financial habits are. This is where AI tools have quietly entered the picture. Modern financial apps now track your spending, predict your cash flow, and automatically optimize your payment timing so that your utilization looks lower at the exact moment it gets reported to credit bureaus. That single shift alone can boost a score significantly, without you earning a single extra dollar. Now here's where most people get it wrong. They focus on paying off debt as quickly as possible, thinking zero balance equals perfect credit. But in reality, completely eliminating activity can sometimes slow your score growth. What high-level users are doing instead is something called smart debt stacking. Instead of randomly paying off accounts, they prioritize debts based on how they impact utilization ratios and credit mix. For example, revolving credit like credit cards affects your score differently than installment loans like auto financing. By strategically keeping a small, controlled balance on one account, while aggressively reducing high utilization cards, you create a profile that signals both activity and control. It's not about being debt-free immediately, it's about being debt efficient. This is where AI becomes your silent financial assistant. In 2026, advanced tools can simulate how your credit score will react before you even make a move. You can test scenarios like paying off one card versus splitting payments across multiple accounts, and the system will show you the projected impact on your FICO score. Some tools even automate micropayments throughout the month, keeping your reported utilization artificially low without changing your actual spending habits. It's almost like gaming the system, except it's completely legal because you're operating within the rules of how the system calculates risk. Another overlooked factor is credit age and account diversity. Many people unknowingly damage their score by closing old accounts, thinking they're simplifying their finances. In reality, those older accounts act like anchors, stabilizing your credit history. AI tools now flag which accounts should never be closed, and which ones are safe to eliminate. At the same time, they recommend when to introduce new credit lines to improve your mix without triggering unnecessary hard inquiries. Timing has become everything. Opening a new card at the wrong moment can temporarily drop your score, but opening it when your utilization is low and your payment history is strong can actually accelerate your climb toward that 800 plus mark. And then there's the psychological side of all this, which most financial advice completely ignores. The biggest threat to your credit score isn't lack of knowledge, it's inconsistency. People start strong, then miss a payment, max out a card, or lose track of due dates. AI eliminates that weakness by removing human error. Automated alerts, predictive budgeting, and even auto-pay optimization ensure that your financial behavior stays consistent month after month. And consistency, more than anything else, is what the FICO system rewards. By now, you're probably starting to see the shift. This isn't about working harder for your credit score. It's about working smarter with it. The combination of AI tools and smart debt stacking turns your credit profile into a system that runs efficiently in the background, while you focus on building actual wealth. Because at the end of the day, an 800 plus credit score is not the goal, it's the gateway. It unlocks lower interest rates, better loan approvals, premium credit cards, and financial leverage that most people never access. So if you're still following old school advice, just paying bills and hoping your score improves, you're playing checkers in a world that has already moved on to chess. But if you start using AI to guide your decisions, optimize your utilization, and structure your debt with intention, that 800 plus score stops being a dream and becomes a predictable outcome. And once you reach that level, you'll realize something powerful. Credit isn't just a number anymore. It's a tool, and in 2026, the people who understand how to use it are the ones quietly winning the financial game.